And in our top business story, Dubai offers some of the most profitable hotel rooms in the world, according to new research released by STR Global. STR said the gross operating profit per available room in the Emirate was $184.35 last year. Gross operating profit takes into account operating costs such as food and payroll. STR surveyed 8,000 hotels in 50 countries outside North America for the annual profitability data. Dubai finished third in the ratings, behind Hong Kong and Paris, ahead of Singapore and London. Properties in the Middle East and Africa reported the strongest growth at 5.4% in gross operating profit per available room, with the figure for Asia-Pacific declining by 0.5%. According to experts quoted in a local report, the strength of Dubai lies in demand as well as high food and beverage revenue compared with other markets in Europe and China, with the average 4-star or 5-star hotel in Dubai having around 5 restaurants. London, which is popular with Middle East travellers, clocked in at $163.01. The European market is driven by corporate business and reports lower spending in the food and beverage sector. Last year, 11 million tourists checked into Dubai's 611 hotels and hotel apartments. By 2016, Dubai is expected to add 139 properties, including 91 hotels and 48 hotel apartments, according to the Department of Tourism and Commercial Marketing. The UAE also has the highest number of rooms under construction in the Gulf region at 17,137, according to STR. Saudi Arabia comes a close second with 15,415 rooms. Qatar, Jordan, Morocco, Egypt, Algeria and Iraq are among other countries in the Middle East and North Africa that have anywhere between 2,000 and 6,000 rooms each in the pipeline. Sobha developers have announced the launch of a new mixed-use development within the prestigious Mohammed bin Rashid Al Maktoum city. Located approximately 3 kilometers from Burj Khalifa, the family-orientated community has over 30% of the 185-acre project dedicated to green living and is now offering its homes for sale. The Sober Heartland residential offering will comprise of only 282 contemporary L-shaped villas plus mid- and high-rise apartments. Commenting on the development, Mr. PNC Menon, the founder and chairman of Sobha Group, stated that Sober Heartland will have all the amenities a community needs, spanning 2 schools, retail outlets, hotels, spa and entertainment facilities, all in one central location. The freehold properties are designed to suit individual and family needs and range from 4, 5 and 6-bedroom signature villas. In addition, the low-rise garden apartments range from studio to 3-bedroom duplexes. The new Sober Heartland Sales Gallery is located at the Sobha Sapphire building in Business Bay, with the developer announcing that Phase 1 villas are available for sale immediately. DP World, one of the world's largest port operators, has signed a $3 billion loan deal, becoming the latest Dubai entity to take advantage of buoyant funding conditions to improve terms on its debt. The new 5-year facility is split between a $2.39 billion conventional loan and a $610 million Sharia-compliant tranche, according to local reports. The new deal, which was signed on June 30, according to sources quoted in the report, replaces an existing $1 billion deal that was due to mature in 2018 and had already been renegotiated once to add a year to the lifespan. DP World began talks with banks earlier this year to triple the size and extend the lifespan of the existing deal, as well as to reduce the interest rate. The new transaction pays 150 basis points over the London interbank offered rate, down from 225 BPS over the same benchmark for the existing deal. DP World is the latest Dubai-based entity to negotiate better terms for its borrowing, taking advantage of improved sentiment towards the Emirate among foreign banks. Last year, financing deals for Dubai duty-free and Emaar properties and a secured loan for the Emirates Roads and Transport Authority, backed by revenue from the Salik toll network, were all renegotiated down, in some cases by more than half their original cost. Schroder Capital has reported a net profit of 14.4 million dirhams for the first half of the year, compared to a 4.6 million dirham net loss in the same period last year, according to the preliminary unaudited first half 2014 financial results. The company's all-core fee and interest-generating business divisions posted profits with significant progress coming through in asset management, investment banking and lending. Schroder's total revenues were up 46.1% at 16.2 million in the first half of 2014 compared to 79.5 million dirhams in the same period in 2013. In the second quarter of the year, revenues were up 20% at 52 million dirhams compared to 43.4 million dirhams in the same period last year. Net profits for the year was up at 6.2 million dirhams compared to 1.3 million dirhams in the second quarter last year. And the asset management division reported a second quarter net profit of 4.2 million dirhams. Investment banking continued to post solid results in the quarter with a net profit of 4.5 million dirhams from a number of advisory and IPO mandates. During the period, Shua was sponsor and joint book runner for the successful Emirates REIT IPO.